Hello, Oracles. Well, after a wonderful day yesterday where we bottomed really deep in Tesla stock, about 9.5% down, rebounded, still finished in the red, but came way back from 851 all the way up to 930. We are now looking pre-market down to about 911, 912 at the time of this recording. Where are we going today? As I discussed in last night's video, yesterday may have just been kind of maybe a head fake, not sure. We still have a day and a half worth of trading before we get the Fed's decision. That's going to lead to some more volatility. So while I have a buy price in for Tesla at 845, I missed it. We only got down to 851. We might get down there to 845 again. I discussed yesterday that there's a gap that we need to fill back from October that goes down to 843. We might fill that gap, and then we'll see what happens with earnings, which we will discuss later. And so when it comes down to the stock price movement, yes, you can get emotional over it, but take your emotions out and let's take a look at some of the fundamental things that are going on with the company. So we're going to find out the majority of these fundamental things that a lot of us are making our predictions on, and we're going to find that out at earnings on Wednesday, tomorrow afternoon. So that's fantastic. But what just happened today? Well, Moody's just raised their credit rating. This is something we've been talking about for a while, because as soon as Tesla gets themselves to investor-grade credit ratings, then we're really going to see a lot more institutions getting into the stock. So the credit rating took them from a BA3 up to a BA1. BA1 is one step below investor grade, so it's still considered a junk rating. However, it is one step below that. Now, we are still waiting on other credit ratings, which after earnings will most likely bring them up. No guarantees, but after we saw the Q3 earnings, their credit rating went up to where it is now. The S&P has them at a BB+, which is also one step below a investor grade rating. So we are anticipating that that's going to be a huge step. So when you are looking at the stock price right now, it keeps getting depressed more and more. Just take a look at the valuation. Take a look at the PE ratio. That PE ratio is coming further and further down. And we have earnings coming out. So when we have earnings coming out, we're now going to be able to get a new PE ratio based upon their current earnings. It's going to be very low. And considering where we are going for growth in the future, again, you got to do your own research, do your own math, make your own decisions. But if you're looking at a company that is expected to do 50% growth every year for the next 10 years, chances are that it's going to do very well in the long term and you're going to get a great return on your investment. But, it's one of those things where you take a look at what is the return on your investment going to be. Do you want to buy the stock when it is at a point where, valuation is extremely low, or do you want to sell it? Because if you sell the stock when it's now at these levels, how much further down can we go? We can go down significantly further, sure. We could have a full year of pain, and the stock can come down well below where it's at now. But where do you want to look at it long term? And this is why we dollar cost average and why dollar cost averaging is the best way to get the best returns on your money. Because if the stock does keep going down, but we know the fundamentals of the company are strong and they're getting rating increases despite the fact that the entire market is pulling down right before their earnings, that's a very good fundamental sign for the company and a great reason to invest long term. If you're investing and you're trading, it's a different story. But if you are actually investing rather than trading, go with it, man. Just dollar cost average, you will win every single time. And so, I look at that, I look at other different fundamentals, I look to see what the company has going on. Again, we've got the roadmap coming out, which is huge. Austin and Berlin should be coming online soon. And the Cybertruck, they have a display over in Austin right now. Lots of videos online, lots of videos you can see on Twitter and YouTube. If you haven't seen them, check them out. It's outstanding. Just seeing this now coming to fruition, closer than we were before. So many bears out there saying that, it's never going to happen, this and that. Yes, true. We still do not have proof of production. Hopefully we will get clarity on that on the roadmap. But look at it. They're putting this much effort in and making it better and better. Most companies, if they make a prototype, it's like, all right, here's our prototype and cool. That was fun. We'll move on. Like Tesla's continuously redoing their prototype. They're making it better and better. They're tweaking it and improving things. You know, Elon is not a guy who wastes money on stuff like that. If he's going to be spending money and investing money on a project, it's going to be a project that he looks to get a return on that investment from. So this is why, you know, I have no concerns about the Cybertruck, whether it's actually going to come into reality or not. I've got my reservation in, so I'm looking forward to it actually coming to reality and me being behind the wheel and driving it around, or letting it drive me around. We'll see what happens when FSD gets to level 4 and level 5. And so yes, we can have our emotions get tied up in the stock price at the moment, but one of the most important things I did for myself was I learned how to create a valuation model. In doing so, and in learning how to do this, and in learning how to see all of the numbers that are in play and how they can affect each other, I have really grown my conviction for the stock. And, you know, I've seen what the numbers are doing. I've seen the projections that they have. I've seen the growth trajectory that they are on. And I'm like, it gives me more and more conviction, which is why I've gone from 20% of Tesla in my portfolio to 55% in my portfolio. And, you know, part of this is because all of the entire stock market is coming down and I invest daily into Tesla. But I'm not concerned about that because looking at the fundamentals of the company through a valuation model that I created for them really gives me the insight and say, oh, I could take my emotions out because I see where the true fundamentals of the company are going. I see what is going on truly with the company, what their growth projection is, and there's no reason I won't want to be in it. And these prices just look better and better as it comes down. My emotions are long far out of this. You know, I get actually excited when the stock price comes down because to me, that just is a bigger discount. When you look at it strictly by the numbers, it's a huge discount. It really is. And so then when the stock starts to run up, it's awesome. I could be excited on both ends of the spectrum because, hey, either my portfolio is growing immensely or I have bigger discounts that I could buy Tesla stock at. It's win-win for me. So if you happen to be a person who does get emotional over the stock price going down, if you're asking yourself the questions of, should I sell when the stock is going down? I encourage you to create your own valuation model. Take a look at that. And when you start to look at all the numbers and you figure all those numbers out, you'll probably tell yourself, you know what? It is definitely foolish to sell right now. Now, you heard of a lot of other macro environment issues going on, so I'm not a financial advisor. Perhaps the stock market comes down another 20% over the next 3 months, and selling now is a wise move. I don't know what tomorrow is going to bring. I look at 5 to 10 years down the road. If you're looking at 5 to 10 years down the road and you're looking at the fundamentals of Tesla, you're going to realize that regardless if the price comes down another 50% this year, over the next 5 to 10 years, that return on your investment is just going to be that much greater. Because don't forget, the stock price went up 740% in 2020. The company itself is growing on a fundamental level, and if the stock price doesn't reflect it, eventually the stock price will catch up, and it may catch up fast. Tesla has proven that it will do that. Let me know in the comments below, do you guys have your own valuation model made up for Tesla? And what do you think about the credit rating increase? And do you think that S&P is going to increase their credit rating in February as well to put them to investor grade level? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, as well as all of my daily trades over there. Otherwise, have yourselves a great day. Thank you so much.